Hey there, Wealth Nuggets fam. Did you know that gold has been a reliable store of value for centuries? Indeed, gold's history sparkles with intrigue and allure. From the ancient Egyptians who covered their pharaohs in golden sarcophagi, to the Roman emperors who minted gold coins as a symbol of wealth and power, to pirates who sought it as booty, gold has been cherished for its beauty and scarcity. But its allure goes beyond mere aesthetics. As opposed to paper currencies that are susceptible to inflation and can be printed at will, gold's intrinsic value remains relatively stable. This stability has made it a trusted form of currency for thousands of years, allowing it to weather economic storms and societal upheavals. Fast forward to today, and gold still holds its own, but why? Investors today consider gold for several reasons. First, it's an effective hedge against inflation. Remember the Great Recession? While stocks plummeted, gold's price soared, making it a reliable shield against rising prices. Second, gold is a great diversifier. It's like the calm buddy in your portfolio's storm. It doesn't dance to the same tunes as stocks or bonds, reducing overall risk. So, it's not about putting all your eggs in one basket, but having different baskets for different eggs. Third, gold is a safe haven in turbulent times. When pandemics or geopolitical tensions shake the market, investors often turn to gold. Its perceived stability makes it a comforting option amidst the chaos. However, gold isn't a magic investment potion. While it has its glittering perks, it also carries its own set of challenges. It's not all sunshine and rainbows, folks. There are downsides to consider. Before you rush to invest in gold, it's important to understand its limitations. First off, gold has limited growth potential. Unlike stocks, gold doesn't generate income through dividends. Its value primarily relies on price appreciation, which can be slow and unpredictable. So, patience is a virtue when investing in this shiny asset. Additionally, if you're considering owning physical gold, be prepared for storage costs and security concerns. Stashing a gold bar under your pillow isn't exactly practical or safe. Furthermore, while gold is often considered a safe haven, it's not immune to volatility. The price of gold can fluctuate based on various factors, including market sentiment, economic conditions, and even geopolitical events. Don't expect a smooth upward climb all the way. So, while gold can be a glittering addition to your portfolio, it's not without its challenges. Still intrigued? Let's explore how you can invest. There are several ways to dip your toes into the gold market. First, we have physical gold. This is the traditional route where you own the gold in its physical form, like bars, coins, or even jewelry. But remember, this comes with storage and security costs, and it's not as simple as stashing it under your mattress. Next, we have gold ETFs, or exchange-traded funds. These are funds that track the price of gold, and they offer a more accessible and liquid way to invest. Picture owning tiny fractions of gold that you can buy and sell with ease through your brokerage account. Lastly, there are gold mining stocks. This is like buying a piece of the gold digging action. These stocks can offer higher returns, but beware, they come with their fair share of risks due to the volatile nature of the mining industry. Let's see how gold performed in real-world scenarios. Gold's performance during certain periods highlights its potential as an investment. Let's take a trip down memory lane. Back in the inflation-ridden 70s, gold prices rocketed over 2,000%, showcasing its prowess as an inflation hedge. Fast forward to the 2008 financial crisis, stocks took a nosedive while gold prices soared, demonstrating its safe haven appeal. But before you start your gold rush, let's remember a few key takeaways. First, do your research. Understand the risks and potential rewards before diving into the golden waters. Second, start small. Don't go all in at once. Gradually build your exposure as part of a balanced portfolio. Finally, align gold investments with your goals. Consider your risk tolerance and investment horizon. Gold can be a valuable long-term investment, but it's important to understand its role within a diversified portfolio.